I'm Lauren Huster. I'm an International Tax Director here at Barnes Denning. And today I have my colleague Michael O'Hara with me, and we're going to kind of talk about what is the key concept that you have to understand to even understand international tax. And that is permanent establishment, often referred to as a PE. People hear it a lot, but they don't totally understand what it is. So Michael, can you kind of just give us a little overview as to what it stands for and what it means?
Sure. They're typically defined similar between treaty to treaty between the different foreign countries, but there are a few exceptions and differences that you should look for if you've been inside one foreign country and you move into another one. A permanent establishment is defined inside the tax treaties as a corporation who has a fixed place of business inside a local jurisdiction. And inside that definition, we can really pull out three key elements. First is that there exists a place of business. Secondly, inside that place of business, it's fixed or permanent. And lastly, the business is wholly or partially carries their activities through that location. Some examples would be a place of management, an office or a branch, or a facility and the like.
I hear you say fixed place of business a lot. Does that necessarily mean you have to have a fixed building to create a PE?
No, it doesn't. Thank you for bringing up that point. Back in December, we had a webinar that talked about this topic in greater detail. But in short, with the changing environment of employers and employees in this post-pandemic world, we're seeing an increased rate of remote workers. And this is a critical step inside the business owners that they need to understand, because you could trigger a PE through a dependent agent. A dependent agent is someone who acts on behalf and carries out activities on behalf of the corporation. And there's really just two kind of conditions that need to be met in order for this not to create a permanent establishment. And first, that agent must be both legally and economically independent of the corporation. And second, that agent must be acting in the ordinary course of their own business when carrying out these activities for the corporation.
Okay, so that's kind of a way to avoid being a PE, but if, let's say you do trigger it, what are the risks when you create a PE?
As I mentioned before, tax treaties vary from treaty to treaty, but something that every single one has is the tax rate that when you create a PE that they're going to be taxed at. Some other things that we need to look at is how do you register those countries in those countries that you moved into. And most often, the taxes that you will pay are indirect taxes, such as a goods and services tax or value-added tax. The greatest risk that we see is when companies create a PE without realizing it, and with that, you fail to pay your business taxes. That can cause back taxes, interest and penalties for the corporation. Another risk that we see is that the employer liabilities, such as registering your company correctly. Some other risks that we see are employer liabilities, such as registering your company when you move into those foreign jurisdictions that I just spoke about, and also if you have to pay payroll taxes for those employees that are employed in the local jurisdictions. Reputation damage is another aspect that we should look at. When you're moving into a foreign jurisdiction, the first impression that you should have should not be back taxes, interest and penalties with those foreign regulators. With that, you also could enhance the increase of future audits with those foreign regulations since you have not filed previously. This is why it's super important that you talk to your advisors early on in the process when you're moving from country to country. So we can tell you the likelihood of you hitting a PE, and we can help you with all the day-to-day actions that you need to set up before you step foot in that country.
Yeah, it's never fun to go back and kind of fix it. So, I mean, the PE is just a laundry list of items they have to do, but are there specific activities that companies can kind of know they're doing and not create a PE?
Yeah, if a corporation has otherwise met all conditions to create a PE, there are certain activities that are exempt. For instance, if a location is solely used for the activity defined as incidental, preparatory, ancillary, and character, those type of activities are not they do not meet the qualifications of a PE. For example, a storage unit that you're just using to deliver goods to a customer, that will not create a PE. Thank you for watching our video with Tax Experts. Please visit us at our website at barnesdenning.com.